Hey guys, welcome back to another video by Fully Informed Trade, or if I trade for short, knowledge for everyone. My name is Alex Cho, and right now I'm going to be talking about the S&P 500 SPX. And basically the Standard & Poor 500 has had a pretty awful day on the session. I did mention that. The unemployment rate did come out extremely, pretty weak actually. It was below expectations, so both the negative unemployment rate and the sudden surge in the US dollar both kind of made the stock market crater. Again, I was expecting a pretty bad day on Friday, and stocks pretty much did the profit-taking. Unemployment rate kind of helped it, and then to top it all off, the dollar had a tremendous rally. So all three factors kind of killed the stock market. Been an awful day for those who have been buyers in the stock market. And it all comes back down to the one simple principle. You guys look for specific trade setups. Trying to trade the market could be pretty difficult, but if you look for specific stocks to buy into, specific opportunities, those are the type of things that can save you, regardless of whatever the S&P 500 might be doing. So again, keep that in mind. Another thing I do want to mention is that I would prefer you guys to be in non-cyclical assets. And the main reason why is because they generally have lower beta, and it helps for you guys to rein in your risk tolerance, mainly because of the fact that markets can be extremely insolvent, and you guys could be extremely insolvent for long periods of time without any payoff, or you guys could just cut back your volatility and remain solvent, and make some decent amount of money regardless of how whipsaw-ish the stock market might be. Another thing I do want to talk about though is this pullback. It is a bearish engulfing pattern. It has fallen quite drastically. And I think that the 20-day and the 50-day moving average could be reasonable support for the stock market to get a decent bounce at around 1,340 for the S&P 500. This could be a very good area for a decent bounce because of that intersection of both the 20 and 50-day moving average. So watch that very closely on Monday. I think this will be a pivotal area for support. Could be very short term. Maybe it could hold on to it for a day, maybe for a couple hours within a trading session, but it could be a decent scalping opportunity for those out there who do trade the S&P 500 futures contract. So take that into consideration when trading, and I hope you guys have a wonderful trading session on Monday. I'll talk to you guys more on Monday, and I hope you guys make money every single day of the year. So take care, folks. You guys have a wonderful day.